Good morning, Bookmap. Woo, good morning, Bookmap. My name is Charles. I'm the founder of a company called Piratetraders. We're a community for day traders. We stay focused on the ES, the NQ, and the two-way auction process. Quick disclaimer, all opinions this morning are my own, and they are all just guesses. They're all just lucky guesses as to what's going to come next in the market. So don't take any trades based on anything I say. But if you pay attention, you might learn a thing or two. Let's get into it. Good morning, ebb and flow. Oh, my camera. Good morning, ebb and flow. And I trade. Welcome, welcome. All right. So we'll start with Jim Dalton's top-down approach. We're going to zoom all the way out, and we're going to take a look at the market on the monthly chart. And the reason that we're going to start with the monthly is it just gives us some perspective. It gives us something that's a little different than our intraday look at the market to get an idea of what could be happening. Okay, so first off, bigger picture, the market has rolled over to the upside, and we've begun momentum to the upside. We are seeing on the monthly chart that last month we were just balancing off the excess from the previous month. So what are we thinking? Well, this could be a balance area, right? We might just need to go sideways in this range for however many months we have to before we can break higher. We can see we balanced sideways in this range before we broke higher. We balanced sideways in this range before we broke lower. We balanced sideways in this range before we broke higher. So to assume that we might just get more balance in here on the monthly would make perfect sense. All right, let's zoom in a little bit and take a look at the weekly. Okay, so we're getting a little more information when we look at the weekly. We're seeing that the market was smacked down right in the same place that it was previously, running out of momentum in that same zone. We can see that we had a chance to balance off the most recent excess. So this is a little more confusing. Let me zoom in a bit here. So this move here was excess, and we could have balanced that off either by just going sideways at higher prices, but we couldn't, so we had to pull back down. We pulled back down, filling the old gap, giving us a chance to balance it off with price. But now it would seem even that is not enough, which means we need to balance off larger excess, which would be something more like the move up from here. So that's very important to be aware of. We may have been thinking at the end of last week that this was an area the market could find support and turn around. But if we don't today, well, then we might have a few more weeks of pullback ahead of us, right? Now let's zoom right in on the daily and see if we can get some more perspective there. So what jumps out at me at the daily when I look at it? Several things. One, we have a channel clearly marked here on the chart. That channel is a way for the market to balance. It is just balancing in that range as opposed to balancing sideways like it did up here. So that channel should be treated like a balance area. When you head to one end, you should turn around and head to the other. If you can't break higher, you should turn around and head back down. So opening today right in the middle of that balance really doesn't help us at all. But where the market moves once it's open could give us an indication. Are we heading towards that balance area low, or are we heading back up towards that balance area high? Okay, so that's an important thing to be aware of. Whichever direction the momentum picks this morning, it's likely to get some continuation because it's right in the middle of balance, so it could go up or it could go down. Okay, great. Next thing I'm looking at is the previous resistance from back in June and July up here. That is now acting as resistance once again on Thursday and on Friday, smacking the market back down. So that is, again, as we saw on the weekly chart, a sign that perhaps we need more price to pull back. if that is going to be the case, the next level that jumps out at me is that gap fill down here at around, we'll just call it 42.50. Actually, sorry, 42.80. That's the direction we'd be going. So if at first the momentum sets in and it's sellers, we assume they're heading to that channel at the bottom of that channel. But if they start to break below it, we'll be looking for resistance for continuation lower. Okay. So looking at the monthly, looking at the weekly, and looking at the daily, I would describe myself as neutral to bearish. Okay, meaning I believe the market will either go sideways or go down today. So now I need to give myself some perspective of how I would know that that's happening. How am I correct in my assumption? What are the levels that I want to watch? What is the information that I want to look for at those levels? So for that, I'm going to zoom in on the market profile here. So first things first, we've got this very large node of time and volume from the overnight. Okay, that tapers off. Less time, less volume, less time, less volume, less time, less volume. That completely tapers off at yesterday's high, at Friday's high. So that tells us that the overnight market over the weekend tried to go higher, and the market was like, no, and just kept slapping it right back down. So our assumption today should be that if the market's able to get back up there, the same thing is going to happen again. It's just going to get slapped right back down. So to me, the most important level to watch to the upside is this node right here around 44.90. Okay. We also have a set of single prints. Let me see what day those are from. No, those have all been backfilled. Never mind. Ignore those. Boom. Okay. So we've got this node right here. That is going to be the top of our chop zone. Okay. So that's where we assume if the market opens and it starts to push up, probably if it's going to go sideways or lower today, as I predict it will, that's where it's going to get smacked down. Right. And only if they get through that level and then they come back down and they start to turn it into support, will I begin to think maybe we're going higher today, right? But until then, my assumption is the market is going to get slapped down right in there and then turn around and head lower. Okay, well, what about on the lower end? What am I looking for support? Well, here's this area right here where we spent all this time and brought in all this volume on Friday. And then look what we have right next to it in the overnight. Exact same area became support. When those overnight traders tried to take it lower, they spent very little time and brought in very little volume down there. Okay, so my assumption is, you guessed it, the same thing is going to happen again this morning. If they try to take it down there, they're going to get slapped right back up. So I'm going to choose to see the market at the open this morning as a chop zone. Meaning I believe it's just going to grind up and down and up and down and up and down inside this box between this node down here and this node up here. It's just going to go up and down. Now, it will be incredibly hard to predict which way it's going to break out of that chop zone while it's chopping. The reason is because this will be the market figuring out what it's going to do next. It's not like the market knows. It's not like the market already decided at 9:15 in the morning where it's going to go today. No. There are many participants that haven't even turned on their computer yet, right? They haven't even begun to decide what they want to do today. So the market will probably need some time. Maybe it'll be 5 minutes. Maybe it'll be 5 hours. It'll probably need some time to just go sideways, to just play tug of war, to let the buyers try to take it higher, let the sellers try to take it lower. And then through that price exploration, the market will figure out where it wants to go today. Does it want to go higher? Does it want to go lower? Or is it stuck just going sideways all day? Okay. So while the market is in that chop zone, I'm not going to be trying to predict what's the bigger move here. What I will be doing, like a hawk, I will be just focused in on every single movement that the market is doing within that chop zone, not because I'm looking to enter trades, excuse me, not because I'm looking to enter trades, but because I'm looking to understand what's happening. I'm looking to understand who is in charge here, the buyers or the sellers, who's bringing in more volume, who is doing it at a faster tempo versus a slower tempo. I'm just looking to have an understanding of what the market is doing. Once I have an understanding, once I feel like, okay, the buyers are winning or the sellers are winning, now I know the market is either, we're going back to the daily again, the market is either going to head up for that balance area high, the top of the channel, or it's going to head down for that balance area low, the bottom of the channel. Once I know where it's going, and I have, a strong belief that I understand what's happening, then I'll look for opportunities to make money. Then I'll say, okay, how can I get in a trade to go down and test that balance area low? How do I get in a trade to go up and test that balance area high? But until then, the best thing to do is to not try to force it, to not try to decide right now at this moment where it's going to go. Because then if the market starts to give me information, for example, if I'm convinced we're heading down and the market starts to give me information that actually the bulls are stepping in, well, I want to be aware of that. But if I'm convinced that it's going to go down, my brain will play a game on me called confirmation bias, and it will not let me see the information that's telling me I'm wrong. So the best thing to do is be open to any possibility in this first half an hour, hour of the day. And to not feel a need to force my way into a trade. Oh my God, it's going up. I have to be long. It's going down. I have to be short. Oh man, it went a whole 5 points without me. Who cares? Who cares? If you don't know what's happening, you don't have to be in a trade. So that is my focus this morning. I'm just going to sit back, relax, sip on some coffee, watch the market chop around, and look for an understanding of what comes next. Any questions for the chat on that? Or anything for that matter? We got 15 minutes to kill. Good morning to Deborah, Bob, Faces, Lucky Guesses. Yeah, so Faces, you must be new here. You're about to have your mind blown. How perfectly I will call support, resistance, and reversals and everything else. But the trick is that in the beginning, I'm not forcing it. I'm waiting for an understanding. Pavel, good morning to you. Jay is here. Good to see you. TGIM. Scooball in the house. Thank you, Faces. Oscar says, I'm from Colombia, but my English is bad. That's all right. Just do the best you can, and I will do my best to interpret it. No judgments here. Gar, thank you for joining us. Happy to have you. JK, good morning to you. Anders, welcome. Frito in the house. New Culture is here. So obviously, as always, one little trick I like to do at the beginning of the day with the Bookmap is just zoom it all the way in. Just whack, shrink it all down, as you can see here on the chart. And just kind of from this perspective, see where are those larger nodes of volume. So knowing that there is this one massive node just kind of hanging out down here around, looks like about 4405-ish, is going to be a magnet to try to pull the market down there. But if it magically disappears at some point in the day, I'll want to note that because that's the market getting freedom to turn around and head back up. Freedom! And as far as getting a little closer to price here, the liquidity that's wrapped around price above and below, I'm not going to put too much insights into this liquidity below right now. I have a feeling all of that will disappear once the market starts to push down there. So I'm really just laser focused on these two levels and how the market bounces between them. Suffice to say, as we push down into support, I bet a lot of this liquidity disappears. And a whole bunch of new liquidity starts to pop up here. Oh, before I draw the chop zone, let's take a look at the NQ as well. The NQ in a channel AF. Okay, so same thing with the ES. The lack of support on the smaller pullback with price, right? We would have thought, okay, they were trying to go sideways to balance off the momentum up there. When that failed, we assume they're pulling back. But the fact that they are not finding support increases the odds. They too are going for that next gap below. So I would describe myself as neutral to bearish on the NQ as well. Looking at the daily. We are opening inside Friday's range and exactly the same as the ES. All the momentum died above Friday's high and all the momentum died below Friday's low. So I suspect it's gonna be a chop zone. Chop it up, baby. A little choppity choppity chop. I would even give it a little bit of a tighter chop zone here. I would say like 15,445 through 15,155. That's your chop zone. So they're likely to just play tug of war like crazy up and down in here. Pull, push, pull, push, pull, push. But whichever side breaks, we'll look for a pullback to turn into support or a pullback to turn into resistance and then continuation in that direction. Again, my guess is sideways to lower, but we'll have to wait and see. Anders says, I just signed up. A friend of mine have been here for a while and told me your stream helped him so much. Well, thank you. And thank you to your friend. So for those of you that are new and don't understand who I am or what's going on here, basically, I do something called trading the two-way auction process. And what that means is I simplify everything down to a very, very simple way of looking at the market. The less I look at, the easier it is for me to understand what's going on. So I'm really focused on just a few simple things. You're going to hear me repeat them 1,000 times over. I'm going to say, we've got support. We've got resistance. There's buyers stepping in here. The tempo is slow. I'll be saying like the same things over and over again. This could mean that. That could mean this. This could mean that. And I'm just going to keep throwing out ideas of what could happen next in the market. Well, this new selling here could lead to the market going here. This new buying here could lead to that. If we don't get buying here, it's going to lead to this. And I'll just be throwing out ideas. It could be this. It could be that. It could be that, right? That is how I think all day, every day. I'm essentially just thinking out loud to you guys. I am every minute of every day asking myself two very simple questions. What is the market trying to do? and how good of a job is it doing of it. That's all I really care about, is just I want to know, looking at the charts, looking at the information the market is giving me, what do I think it's doing? Is it trying to go up? Is it trying to go down? Or is it just going sideways? It really is that simple. And then how good of a job is it doing? If it's trying to go down, but the minute we get into this node of support, the market finds support and turns around, well, then it's not doing a very good job. And it's probably not going to keep going down. So there's nothing for me to do there. But if it goes down and it breaks through that node, well, then I can say, okay, it's definitely trying to go down. Then if it comes back up and it turns that node into resistance, then I can go, okay, now I know what the market's doing. It's trying to go lower and it's doing a good job of it. It broke through support. It's now turning support into resistance. So now I can look for opportunities to go short because I have confidence I understand what the market is doing. The only way I can do that, the only way I can play that game, is to always have a scenario in my mind of what it would look like if the market went up, if the market went sideways, if the market didn't find support here, or it did find resistance. I have to always have all of the ideas of what could happen in my mind so that whatever information the market gives me, I know how to use it. Ooh, that tells me it's going down, so it must be going down. Ooh, that tells me it's going up, so it must be going up. And so you'll hear me constantly throwing out ideas. Maybe we find support here. Support here would lead to this. Maybe we find resistance here. Resistance would lead to a pullback. Da 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 da. And the way you can use the stream is to look for things that you're seeing in the chart that you would trade normally. Do they agree with what I'm saying? Right? If I'm saying I think the market's going to find support here and we're just going to chop sideways, but you're looking to get short, maybe you could say to yourself, all right, should I jump in my short? Should I wait for a pullback? Should I sell up at resistance at a higher level? You know, just use it to sort of manage your understanding of what's going on. And I think you will find tons of help in the clarity that comes from the way I'm able to just simplify the process. 4 minutes to market open. So I'll just tell you right now, this is going to be annoying to hear. To me, it feels like they're setting up for a big move up. The reason is because they're opening right on that chop zone low, right? And they're piling all this liquidity in here. This to me is not what they would do if they actually wanted to fill orders down here. Then they would use icebergs and they would hide it. This to me is them trying to trick traders right at the open into going short so that they can come down and just rip their faces off and bring it right back up. So we'll keep an eye on this liquidity sitting in the books here between like 44.60 and 44.67. And we'll just see what happens when price starts to poke down there. My guess is it all disappears. And right when it disappears, and I do mean at the exact moment, suddenly new liquidity will start appearing up here above price. And then we'll know what game they're playing. Crank says, in the chart on the left with the stacked orders, also by Bookmap? No, so the one that you see on the right side of the screen is Bookmap. The one you see on the left with the black background, that is market profile software, also referred to as TPO charts. The company that I use is called Window Trader, but if you just Google whatever broker you use and TPO charts, you find out if they have it. You certainly don't have to use Window Trader. Good morning, 200 dogs. Scott in the house. Scott says, do I have a discount code for Bookmap? It's a great question. I do, but only on my streams, not on their streams. So you'd have to click on the link in one of my streams later. It's a good question, though. All right, market is open. So right out the gate, as soon as that opening bell rings, we know to just sit back, relax. This market's going to go up and down and up and down. It's going to go all over the place, trying to fool traders. The key thing I'll be watching is any level that could be support or resistance above. So we've got some potential resistance right here around 77, 78. We've got some resistance up here around 81. We've got some up here around 87, and then we've got some up here around 90. So I'll just be asking myself, what happens when we get there? Does the market get smacked down, or is it able to stay up there and grind through? The next thing I will watch is the halfback. The halfback is the level that you see with the little white line right here. That is halfway between the high and the low of the range. Can that become support? So if we push up into resistance, and we come back down and turn it into support, I'll assume we're heading up for the next resistance. If not, we're heading down for the next support. And I'll just let it chop up, chop down, chop up, chop down, chop up, chop down as many times as it needs to. And just keep watching what's happening at support, what's happening at resistance. That will tell me which way we're likely to break out of this range. Trading Donkey in the house. Jonathan is here. Arjit, welcome. Nap, good morning to you. ES Trade Monkey, good morning. Mike Who Thinks is here. Good morning to you. If you have not yet, please smash that thumbs up. Got 120 brave souls hanging out. Only 23 thumbs up. Okay, so we pushed up. We got some resistance, came back down, no support at the halfback, so we went right through. We then found support, pushed back up, no resistance at halfback, so we go right through. So this is setting up for chop. Choppity, choppity, chopping broccoli. Mike says I'm muted. I don't think so. Okay, so that is a little bit bearish to see. What just happened was the market worked its way back up through that open, but they barely got anything for it. They got like just a few points of a bounce, and then they did not turn half back into support. So that is a sign the sellers are beginning to build some momentum here. Now, of course, it's still a chop zone. That's not a reason to go short. But in the idea of building a narrative, that is a first tick on the bearish train. Okay, passing back through the halfback, a sign the chop will continue. Charles, this is so boring. This is all you do? You just wait? You just watch it go up, watch it go down, and just wait? Oh, yeah. Plenty of opportunities to come once we break out. But right now, they're just trying to decide which side's going to win. I'll leave that to the short-term gamblers to figure out. I'll let them pick each other's pockets and drive each other mad. Thank you, John. Appreciate you. Patience. Great for trading, terrible for live streaming. It's my slogan. Great for your wallet, terrible for your desire to be entertained. Okay, so what are we seeing over in the Bookmap? As the liquidity is starting to get thinner down here, the colors are getting less and less dark. Suddenly new colors are starting to pop up here. So that just tells us that this liquidity that we're seeing is not, both above and below, is not real orders that want to fill. It is just spoofing. It is just the market trying to cause the chop. They were trying to pull it down when it stopped working. Now they're trying to pull it up. Once it gets up there, that'll disappear and this will start to get dark orange again, and they'll try to pull it back down. So this is how chop zones work. This green dot that you see right here, that is sellers getting squeezed. People who were going short in here, thinking the market was going to go lower, they just got stopped out. So then the market goes up, it starts to build some support, and guess what all those short-term traders do? They go long, looking for continuation higher, and then at the exact same level, they take out a bunch of buyers. Squeeze them short, squeeze them long. And they'll just keep playing that game as long as it keeps working. All right, we're pushing up into some resistance here around 78. Looking for the market to pull back down and see what happens at that halfback. eBay buy and sell. Well, you got to buy and sell. Come on, baby. It's a two-way process. It says bear divergence. No, I'm not talking about a bearish divergence. I'm just talking about the delta between the buyers and sellers. So to get the green dot, there had to be way more buyers there than sellers. To get the red dot, there had to be way more sellers than buyers. But because it was on the way up and because it was on the way down, those were stops getting squeezed out. So it's literally just the business that took place right there at that moment. But that tells me psychologically what's happening with the participants. That the people that are going long and going short right now are not like deep-pocketed long-term investors or like, big swing traders. This is just day traders and algorithms picking each other's pockets. No one knows what's happening. They're just guessing it'll go up, guessing it'll go down. And so as long as that's happening, I know I don't want to participate. I want to leave it to them. Faces says NQ is moving. Let's take a look. No, sir. NQ is still in that chop zone. So remember, the chop zone is going to be this node right here and this node right here. Okay? As long as they're between those two, it'll go up and then it'll come down and it'll go down and it'll come up and it'll go up and it'll come down and come down and go. It'll drive you nuts. But if they can get above this node and turn it into support, well, then there's an opportunity to go long for the bigger move that's going to happen. Or if they can get below this node and turn it into a resistance, which obviously they could not. But if they can turn that into resistance, well, then there's an opportunity to go short and make some money. But right now, they're just chopping it up. Speaking of which, NQ pushing into some resistance right here around 15 to 25-ish. Look for a pullback to the halfback. Which will be at about 15,080 at that point. Oh, what do you know? Look, took out a bunch of more buyers at exactly the same level. I'm telling you, those short-term traders got to stop using those tight stops. They're begging for it every time. New Culture says it would be a chill day if they chop the whole day. I don't think that's going to happen. You know, we started the day looking at the daily. I do believe, you know, since they spent the whole weekend chopping, that they're going to pick a direction today and make a bit of a move. Obviously, my guess is to the downside, but we just have to wait until they break out to be sure. If they are going to go sideways all day, we'll want them to at least try to pick a direction first, and then we can get cessation. It would not be ideal to have a humongous initial balance and then be stuck in it all day, because that just messes up the probabilities. But again, we just got to wait and see. Too early to make that call. Okay, moment of truth, testing this halfback. Can they hold it, or do we pass right back through? And we pass right back through. More chop. Scooball says FOMO in, FOMO out. Sometimes it works, sometimes not. I don't know why. Are you talking about for yourself? I never find FOMO works for me. If I look at my trading journal and I look at all the trades where I made the most money with the minimal risk, It is always something I saw coming way ahead of time. I planned for it. I was like, if the market can come here, if it can turn this into support, then I'll buy it. Those are always the trades I do the best in. The ones where I just feel the need to like, fuck, I got to get in, I got to go. Those ones, sometimes they work, sometimes they don't. Oh, you're talking about the scalpers? Yeah, I mean, that's what they do. And when they win, they feel like king of the world. Like, yay, look at me. I'm a winner. Look at this money I made. But then the next day they give it all back. And then they win again. And then they give it back. And then they win. And then they give it back. And they're like, oh, trading is so hard. Okay, so I'm marking the high here at 44.78 as a low volume high. The reason is because they had less than 100 contracts trade up there. Generally, if there's less than 100 contracts to trade at the high or the low of the day, this is for the ES, obviously, the market will come back and visit that level again. So being that we're in a chop zone and we have a weak reference, I would say there's pretty good odds we'll visit that level again. So, of course, now I'm laser focused on that halfback at 44.74. If they can hold that halfback, they'll likely head back up to test that low volume high. Anthony says the NQ is moving a lot differently today. No, sir. They are both doing the exact same thing. They're in lockstep. They are both just bouncing around inside that overnight range, looking to cause two-sided trade. To get the scalpers long, get them short, then they'll pull it back down, they'll squeeze them out, then they'll get them back long, they'll bring it back up, they'll squeeze them, and they'll squeeze them again. So both markets are essentially playing tug of war right now. Neither market knows where it wants to go today. We're finding it out based on who can win the tug of war, who's stronger. Okay, so now we're testing that halfback. Can they hold it? So do you guys, when you're looking at the book map here, can you see what I'm talking about? So you've got these dark red nodes right here, okay? What happens as soon as they disappear? Red up here, right? What happens as soon as that disappears? Red down here. What happens as soon as that disappears? Red up here. Okay? So that's the liquidity in the market telling you it doesn't really want to go anywhere. It just wants to pull it down as far as it can, then pull it up as far as it can, and vice versa. One more reason to look for chop. All right, so the halfback is holding for support, increasing the odds we're heading back up for that low volume high. And then we're looking for the market to get smacked down once again. Because it's a chop zone, chopping it up. Can I explain the halfback? Easiest one in the world to explain. It's literally halfway between the high and the low of the range. So if the range, which right now is like whatever, a little less than 10 points, so it's going to be 5 points. Like halfway between it is going to be right where that halfback is. And essentially the way I try to describe it, like conceptually, is it's like when a store puts something on 50% off. So if you wanted to go long up here, but you felt like you were chasing the trade, where are you going to be okay with getting in once they put the market at 50% off, right? Then you're like, okay, I would buy this thing now. Just like at a store, right? You might walk by a store 100 times and not think about buying that jacket or whatever, but then you see it's on sale and suddenly you're like, okay, well, I like the jacket enough to buy it on sale. So it's like that halfback is the level where those traders who want to get long but are too afraid to FOMO in at the high, that's where they'll buy, is that pullback, and vice versa. It's also important to note it doesn't work exactly to a tick of support. You really want to think about it more just like that general area. So it can go a point above or below, and that still kind of counts. It's just, is it reversing in the middle of the range? Don't think about it as having to stop exactly to a tick on it. Mr. Cannon Fodder, are you entering a low volume high as an A period is about to end? No. So whilst seeing the support at the halfback increases the odds in my mind that we're going to test that high, not enough to get into a trade. And that is because I can't know for sure, right? I can answer the question, what is the market trying to do? It's trying to do more chop. Look at that. We found support at the halfback. We've got a low volume high. We're probably going to chop up for that high. But it doesn't answer the question of it's doing a good job and like enough for me to feel confident getting into a trade. So no, I mean, that's not an unreasonable trade setup, you know, to get in there with like a tight stop and to target that repair. But I just don't, I'm not able to calculate the probability that it'll work. So I just don't get into trades I don't have confidence will work. Yeah, no, the reason I entered it is because of the 22 contracts that traded at that level, not because the B period was coming. Okay, so there's the test. They just turned it into a poor high. So they put another magnet there. Okay, now it's repaired. All right, so now the market's giving us some insights, right? We created a weak high, came back down, found support, came back and repaired it. So the buyers are trying to take control. Now, that's not enough for me to get long, but now I'm looking to test that halfback once again. If they can find support at the halfback now, they'll likely head up to that next resistance. So I can start to get a little more bullish. Let's see what happens there. And then when they come back to halfback and so on and so forth. But as long as we're inside the chop zone, at least for the first hour, it would be guessing if I'm entering a trade. Oh, fuck. Okay, so I got to leave you guys here and head on over to hang out with the cool kids in the brigade. But just to give you a little bit of an insight to move forward with today, I remain neutral to bearish on the daily. So I still believe the higher probability is that we're either going to go sideways or lower today, like throughout the day, bigger picture. But for now, the chop zone is building momentum to the upside. So we're going to have to just keep watching the resistance levels. What happens when we get there? Do we blow right through them, or do they become resistance and smack us back down? Okay. If we can just blow through all these resistance, no problem, well, then I'm probably wrong, right? If we just keep bouncing and just going right through them and never pulling back, well, then probably I'm wrong on my neutral to bearish take for the day. But if they keep getting slapped down, I'm still right. And then the next thing we watch for is support. Can they turn it into support? As long as they keep finding support at the halfback, they'll head up to the next one. Smack down. Next one. Smack down. Okay? They'd have to get through all that and then find new support above 44.90 for me to get bullish today. Okay? Otherwise, any smacking down, any sideways moving inside that range, to me is just setting up to take the market lower. They're just convincing as many people as they can to go long so they have more liquidity for the move lower later in the day. So at this point, we have an initial balance. The initial balance is the A period low to the B period high. I would say whenever that breaks, it might be in the C period, it might be later in the day, that momentum will be reliable for continuation. But for now, it's just more chop. Let's take a look at the ES. I'm sorry, the NQ. Yeah, same thing. So I would say the node to watch is 15.156 right here. As long as they keep getting smacked down, coming back to halfback, getting smacked down, coming back to halfback, it's still just chop. But if they can get above that node and turn it into buyers, you could look for continuation higher. The NQ looks a little bit more bullish than the ES because the value is overlapping to higher than the previous day, and it's pushing up against the high of the day. But the ES, it's inside the previous day. So uncertainty. Wish I could give you more insights, but that's all I got right now. Thank you all very, very much. Bro, this is a great slogan. Nor Auto Trading says 5 minutes a day with Charles keeps your day job away. There you go, man. Gar, where's the link to the brigade? You're just going to have to, there's no link, but you can just, if you look at the top of the screen, you'll see if you type in piratetraders.io/join, you can sign up there. All right. With that, I will say goodbye. Thank you all very, very much. And I look forward to seeing you here next Monday morning. Members of the brigade, let's frickin' set sail. Bye.